Okay, folks, welcome back. We are looking at the dollar index as our daily chart. And as I mentioned last weekend, we did get this run on the rejection block, which is the highest up close candle here. And the rejection took place and took us all the way down into mean threshold of this last down close candle, which is a potential bullish order block. We've since that day on Friday had a rebound in price. And I don't know if we're going to fall short here. My eye sees this, I guess, as a perfect trend line, if you will. And whenever I see that, it just feels off. Like I don't trust it at all. So it's important to know that we had already defined last weekend, before the beginning of this trading week, that I would require this candle's high, which comes in at, let me see here, 98.37, which is, I think we rounded it to 98.40. So if it trades at 98.40, that would put me back in a bullish order flow. Now, we had the highs here. We had the run initially. We traded back down into the range, came back up, swept a little bit, swept it one more time here. So to me, if we get above Friday's high, it's meaningful to me. Otherwise, I'm anticipating this break in the trend line. That's what I'm looking for. All bets are off if we trade above Friday's high. And if we do trade above Friday's high, that could spell a run to the full dollar mark. So we would look for a run up into here. Where is that here? Let's see if I can get it to pop up. Here we are. So up in here, the dollar could run if we take out Friday's high. That would be extremely bearish for gold and foreign currencies. The problem is I don't know. And we're in the last week of August, and it's the worst trading month of the year, in my opinion, of active trading months. January, to me, is a bad month because everyone's really just waiting to see what everyone else is going to do with their money. So with that said, I'm trading on the context that we are still in the range and directional bias only between short-term dealing ranges, like the mean threshold of the order block here. Draw that in time. We see that response there. This is a after event. Okay, in other words, it's pure hindsight. I didn't see this. I didn't anticipate this bounce. I was looking for it to go lower, run the equal lows out. That's what I'm looking for dollar. Now, since I don't trade dollar, it's really no skin off my back, because it's, again, not about being right and wrong. We're looking for confluences. We're looking for things to line up for institutional order flow, things of support or evidence to build a narrative on why we should be bullish or bearish relative to a particular market. So I'm looking outside of the dollar index. Even though we've had short-term bullishness, and intraday, I looked at this as bullish for the dollar, which lent well to me trading the gold market short. And I'll cover that a little bit in here. I don't want to steal the thunder too much from the lesson I'm going to give you in this weekend's teaching and review. So I don't want to spend too much time on what I was doing with the live trades you saw me share on Twitter today in recording. They will be covered in detail this weekend. I'll have more time to do it there. But I'm also going to slow the recording down that you guys watched today, that is sped up. It's like an hour or so for each one. And I compressed it down into 50 seconds. So there's a lot of things going on inside that recording. So, and like one of my students said on Twitter today, I must be the fastest Photoshopper in the world. Yeah. So anyway, real quick before I get into it, I guess the uncomfort that watching me do those 1 minute chart trades. I'm not trying to entice anyone with a 1 minute chart. I'm just illustrating that price is not respecting a specific time frame. In other words, in the sense of a specific chart. The chart itself doesn't do anything except for highlight specific signatures. And then we look for things outside of the chart, like liquidity pools and imbalances. Those things are what most retail traders are not even aware of. So the 1 minute chart was just to illustrate, again, like I mentioned in my YouTube channel up the other day, referring to is intraday Forex or intraday charting noise. I got a lot of feedback from that, and unfortunately the folks from Goldman Sachs weren't real happy about that recording. So I've been since blocked on Twitter. It doesn't make a difference. It doesn't change the fact that what I'm showing and showcasing is the truth. And there is a narrative that's going on that is seen on all time frames. So the price action is not directly linked to one specific time frame. Like I mentioned on my YouTube channel, the video I put out saying that in my early infancy as a trader, I was thinking that there was this secret time frame. I used to ask that question all the time. What time frame are you trading? If I saw somebody with a winning trade, what time frame are you trading? Because I felt that that was the secret. That was the thing that I was lacking in my understanding. And it's nothing like that at all. So you've seen me exercise in hourly charts. You've seen me do it with 15-minute charts, 5-minute charts, now 1-minute charts. Obviously, you follow me on the daily chart. Now, the benefit of having these recordings, because I have it's kind of like a 70-30 split. 30% in the mentorship are telling me, now I'm not saying there's all 30% have responded to me or sent anything, and I'm not asking you to do this, okay, because I already get way too many emails, and it just bogs it down, and it stresses me out seeing how many emails I'm getting, because I can't get through them all fast enough, and invariably I'm upsetting people because they feel like their needs or their wants or their concerns are not being met, and it's only because there's a lot of you. Okay, so unless it's really, really terribly important, try not to email me. And I don't want to sound like I don't want to hear from you, because if you do have a real concern, obviously, then you reach out to me. But if it's like a real frivolous thing that could be sent to me in Twitter, like, hey, I really appreciate what you guys are doing, that can be sent on Twitter. Or just know that your continuation in the mentorship is the same thing as that. Okay, so. And I appreciate them all. Don't get me wrong, but it's just I personally cannot get to them. My staff leave those type of emails for me to get to over a period of time, and they deal with all the other emails and anything technical I have to do with answering specific questions. But they kind of field them initially. They'll open up the emails and it'll if it's like, hey, I'm trying to understand this or that, they all know the canned response is it's going to be taught in later teachings. Okay, so. Just expect that if you're emailing me, and once you're in Charter member, your emails are going to be much more meaningful to me because you've have the whole collection of core content in front of you, so I can point you in the right direction to pull certain things out. Okay. All right. So anyway, the dollar index. I'm concerned about the pseudo uptrend here. I don't like how it's banging up against this. This is concerning on the buy side too. Like everything in here is, I hate to say it, it looks like it wants to go up. It really does. It really looks like it wants to go up. But I'm aware that that might be the very thing that they're trying to draw sentiment on, like the the trend line that could be drawn in here. That to me is concerning, because if it's that obvious and that just clearly it's in your face, maybe it's one of those textbook examples where, it's right to have that trend line there. I don't know. I don't trade on trend lines. I'm just suggesting to you, because I'm very contrarian. If we would have had, I guess, a little shorter in terms of where we went in this high, if we went up to about here and stopped and then had this movement, then I would anticipate this as just running into the top of that range and then running the rejection block. But we had since done that here and even here. So to me, I don't want to arm wrestle it, because it takes us right back into the problem I had a week and a half ago relative to the dollar index on a long-term basis. Remember, back in May and June, I said that we're in a large consolidation. We haven't left that consolidation. We're still in it. So because it's in consolidation, all the other currencies, you have to rely on correlated pair SMT diversions, individual unique signatures that are in that particular currency or that market, and rely heavily on that, which I don't like doing that because it makes probabilities much lower. I want to see dollar index moving higher when I want to sell short. Okay, so we'll sell short euro and cable and such. And equally so, in the reverse, I want to see the dollar index going down and clearly forecasted going down, where we don't have that clear one-sidedness to a move on the dollar. But if it were bearish, then that allows foreign currencies like euro, dollar, and British pound to rally, unimpeded. So I'm a little still neutral, but this is concerning in terms of whether or not it wants to trade through the rejection block again and just make a more meaningful run above the high at 98.67. So I'm watching that tomorrow and Friday to see what we get, and I won't be able to do any kind of trades or record anything because I have everything I got to do for the mentorship, and I did a PDF outline, so I'm going to be able to share that with everyone on Twitter and on the internet, so it doesn't cost anything for that. The euro pound, we had a run down into, let me zoom back out a little bit here, we have a breaker right in here, breaker. We traded in there, came back up, rebalanced, sold off again, run equal lows, and then punched up above relative equal highs back into a bearish order block. Let's zoom back in. Okay, bearish order block. And we also have a point of mitigation, which it trades back up into here. This big run here is all really attributed to the weakness in cable. And I'll talk more about that when we get into that pair. But right now, I don't know what euro pound wants to do. So it means we're probably going to see a trending move in euro dollar and British pound. Which direction? We'll have to rely on the dollar index to help us with that. Right now it's being quiet, or not suggesting anything to me except for potentially breaking out above that 98. What was it? 98.67. All right. So euro dollar, we've since come all the way back down into this BISI. So it's a buy side imbalance, sell side inefficiency. Everything on the upside has just about been rebalanced. Do we need to go below these equal lows here? That would be my next guess if we don't find some kind of a balance in here. We do have the bullish order block just a little lower than where we are right now, and they may want to see that traded too. And if we trade below this candle's high, 110.68, so we're going to say 110.70, 110.65. If we lose that, then we're probably going to be running these equal lows, and then a continuation on the upside for the dollar index relative to its daily chart would probably be the most likely outcome as a result of that. Now, I don't like euro dollar or anything in this pair at the moment, which is the reason why I elected to trade cable on Tuesday and today. So if we go over to cable and we look at the hourly chart here, we had one high here that was breached, traded all back down, created equal lows. We had one more rally up, and you guys watched me outline this, and this was really the focus of my YouTube channel video that I uploaded yesterday. This portion of price action is what's not being talked about in that video because it's so zoomed in on a 1 minute chart. But the run above this short-term high, we saw that run here. And you also saw how I was able to get short basically really close to the weekly high thus far. Obviously, we're only Wednesday. We have Thursday and Friday to trade still. But I like these equal lows down here And that also supports that likely upside break on the daily chart for the dollar index. We did come down around these relative equal lows, and especially these really clear equal lows in London overnight last night. Now, you can probably hear it in my voice. I'm somewhat tired because I've been doing a lot since last Wednesday, and I just need to be able to make sure I can rest and still do the things I need to do with you guys and still be a part of my family in a conscious sense. So if we go into a 15-minute time frame, and we'll zoom out into today's London session. All right, here's that high I was selling short at. And just go back and watch that YouTube video again. Okay, and you'll see that that's where I'm at with the short. Now I'm completely flat. I don't have any positions open. Nothing. We had this high here as I outlined yesterday, and yesterday on the YouTube video. I didn't do anything by way of the mentorship, but we had an initial run up here. This is the midnight. We break short-term lows here, and we create a small little fair value gap. Let me zoom in a little bit more so you can appreciate it. Okay, small little fair value gap right in here, and bearish order block. Price trades up into that. That's your Judas swing, and the market expands to the downside. And I'm going to go into a 5-minute chart so you can see there's a really nice fair value gap in there, even if you missed that move. Nice fair value gap there. And then we have a nice SIBI here. Sell side imbalance, buy side inefficiency. It's defined by this candle's high. If I can get it to show up. 122.40. So all it needs to do is trade 122.40 again. And obviously, very clearly, you can see it does it here. We can go short there. That's your low-hanging fruit institutional order flow entry drill. That go back and scroll through the video catalog for all the weekly reviews, the Wednesday and weekend reviews, and you'll see one that's titled institutional order flow entry drill, entry techniques or something like that. Watch that and you'll see that that's the very entry technique, because everybody wants to come into the mentorship, teach me how to buy and sell. Well, combine what you learn in month 1 and then use the low-hanging fruit institutional order flow entry drill. That between those two things alone, you have a complete model. All you got to do is apply risk management and don't over leverage. Pay yourself at 20 and 30 and 50 pips, and it's it. You're done. You got a complete trading system. Now, I know that's an oversimplification on my part, but nonetheless, it's the truth. So, price ran down aggressively. I really wish I would have been awake to capture this, because I would have been in all over this. Like, I would have been all over it. And a couple people had already sent me an email saying, I can't wait to see what you did in cable overnight. I was sleeping. I literally was sleeping. You saw me. My first tweet was me getting out of bed, grabbing my phone, and that was it. My day started then. So, with that said, there's a remaining portion of this SIBI, sell side imbalance, buy side inefficiency, or fair value gap. The low to this candle, and then now this candle's high. If you blend those two together to make a complete range, that's this right here. That's consequent encroachment. We trade back up to that as well after running relative equal highs. The high here comes in at 122.25, and then the high here comes in at 122.52, so about 30 pips or so, or just underneath that. Really nice little run up into that consequent encroachment. And I will say this, British pound is a mess. Whatever's going on over there with your new prime minister and the queen and the parliament and all the things I really don't understand about that place, it's a mess. So we're seeing all that here in the price action with cable. So it's probably going to get interesting. I don't believe there's anything relatively bullish about cable this week, which another confluence for the potential break up and out of that daily range on the dollar index. So this high, you watched me outline that yesterday, and the premise was we were trading above the old hourly high here on this candle, August 23rd. There's our turtle soup or false breakout, and they're running buy side liquidity. Okay, relative equal highs. Oh, that's not relative equal to me. Well, to me it is, because there's liquidity resting above that. They punched into that. You watched me actually show you in that YouTube video yesterday. Everyone saw it, but I really didn't get into a lot of the detail that is available come this weekend. But we go back into a 5-minute chart. This big run here makes use of the liquidity below here. And we ran into the 122 big figure, which is essentially right there. And whenever you have that, okay, whenever you hit the big figure 122, any big figure for real, we're trading down into it, you can gap. Okay, you can gap down in 40 pips. That's one of the protocols when you trade to a big figure, trading up to it or trading down to it. You always have to be aware that you could see a run of 40 pips. And I'm going to put a horizontal line on. Okay. And then we have the low right there. And the low comes in at 21.55. So you can see it actually went 45 pips, plunging below the 122 big figure. Now, granted, it came back and rebalanced, but I don't want to be long. I don't want to be buying this currency pair. So that's another reason why I'm feeling comfortable, because even if I didn't have the workload I have, I wouldn't be trading the rest of the week anyway because of that very issue. I don't like anything in euro dollar right now. I don't know with a great deal of confidence what the dollar index is going to do on a daily chart. And British pound has its issues as shown here and discussed, and you guys know more about it than I do across the pond. So anything you guys can tweet to me directly about what's going on over there, I would love to be able to read it in small little pieces like that. Don't send me any long-winded emails because I probably won't get to it anyway. I'm really backlogged weeks of emails. So moving on over to the gold market. I kind of want to talk about this one and then break away and get some rest because I have a lot of work I got to get done tomorrow with you. What I have here is the New York session. Now the New York session, I want to kind of like talk a little bit about how, think of the New York session as an individual candle, okay, or an individual range, okay. And I got a lot of questions already sent to me, and I have not read them, but I'm hopefully going to satisfy most of what you're asking about how I was able to do what I did today in the gold market. If I did not, or if I do not rather, answer everything about what you have wrote about, because everything that I'm seeing in the email, it's how did you do the trade, gold trade, gold New York. I know you're asking about this setup or what I did, so I kind of want to go a little bit over it here and then leave some for the weekend. So the beginning of the New York session is beginning with this blue line here, and this one here encapsulates. And if we look at it from a 15-minute time frame, we zoom in. This is what it looks like, and it doesn't look as important, or I mean, obviously it looks pretty significant because it really broke down. But I want to go into the 1-minute chart because we had these equal highs right here. That was the context. That's the backdrop behind what I was looking at. I knew we were looking at a potential intraday rally for New York for the dollar index. Now, if the dollar index is going up or it looks as if it's bullish, that's going to be bearish for gold because they're inversely correlated. Okay, so you're using intermarket relationships and correlation studies. So after price had ran above these equal highs, we see that here. What I wanted to see is on a 5-minute basis, you can see that there is this low and this high. If you take that range, okay, so we have a high, we have a low, here's equilibrium. I wanted to see a rally above this equilibrium because then we would go into a premium. Once the premium market has been arrived at, and we have already done the dirty work of running stops, that's that 15-minute time frame equal highs. That raid on those buy stops, on buy side liquidity, that's the premise. We've already hit that. There's no reason for it to go up now. The market broke down. We had a market structure break, and we have a breaker here. Okay. If I drop down back into an hourly chart, not an hourly chart, but a 1-minute chart, and zoom out a little bit, go back inside of the New York session. So all of these candles here, when price created that run on the buy stops, we broke down. This is those equal highs. Okay, that line. These are the things you do not see in my Twitter charts. You don't see them in my YouTube channel. Nothing. Okay. But this is how this is like one of my favorite setups for New York session. Now, don't think that I'm saying it only works in a New York session, because it works in every session. But this specific pattern, this setup, is one of my bread and butter, just really easy go-to setups. And it's one of the things I pan through the charts looking for each day. And what it is we want to see a run on stops. It doesn't matter if it's bullish or bearish, whatever one. If it's a run on sell stops, as I indicated here, running on that 15-minute time frame chart. If it were reversed and say that was a run on sell side liquidity on a 15-minute time frame, that's all I require with a bias with the dollar index. Now, since my bias was only limited to intraday on dollar being bullish, I felt very confident that the gold market would create a decline. So notice this drop in here, okay, running below these equal lows. That right there is the sweet spot. That's the little tiny little perfect IPTA signature. I taught this about fair value gaps. You can go back and listen to the recent, a couple months ago, we started our heavier discussion on fair value gaps, and I gave you a teaching on where high probability fair value gaps form. And in this instance here, we have the SIBI, which is a sell side imbalance, buy side inefficiency, and the price comes right back up to rebalance to that. And this level is just simply, it's the old highs. It's the old highs on that 15-minute time frame. Now go out to it again, you can see it, so you can appreciate it. Right in here. Okay, these equal highs, and dropping back down into the 1-minute chart, and zoom back out a little bit. That movement right back up into that level, that's those equal highs after the run on the liquidity and coupled with the fair value gap. Perfect. Now, you noticed in the recording I did today, I was showing that there was my interest at the bearish order block in here. And I got excited. I was like, oh yeah, that's, I'm going to really blow away the mentorship. And I'm going to use the fair value gap, and I'm going to get that better fill. And I changed my mind, because I'm like, oh no, if I do that in this Twitter video, it's going to, well, I'm basically showing what I don't want to show. So I kind of moved it around, moved my limit order real quick, and it just looks like I'm going nuts. But because I'm realizing that if I do that, I'm going to end up drawing way too much attention to this particular setup, which is like one of my favorite setups. And I'm teaching it to you now, so that way you know it's something you will see me use a lot. Okay, I've contemplated doing recording my New York session trades, because if I do that, It'll have a library of what you're seeing in the last couple of days on Twitter and what I did on YouTube. I want to have a bank of examples of what I teach in the mentorship versus me saying, okay, this is what happened, this is what happened. Now, I already know what some of you are saying. Can you just do it live? Can you show it to me live? I don't do that. I'm not going to do that. And that's just the way it is. Okay. We're not signal service here. I'm teaching you how to do it yourself. And if it doesn't line up with what your expectations are, obviously nothing keeps you here. You can decide not to continue with the mentorship. It would be foolish to do that because you're going to learn a whole lot, but nonetheless, it's completely up to you. You decide that. But we also have this run up. This is a Judas swing. All right, so look at this price action in here. Okay, we have consolidation. Price is crouching below a point of liquidity, which is equal highs. Again, that's that 15-minute time frame. We are combining, or I was combining, the elements of time and price and displacement, and we're at a premium. We're at a predetermined price level that's highly specific. It's very, very specific. It's not a zone. It's not an ambiguous range. It's a very specific price level. And it's above where there will be short-term buy-side liquidity, buy stops. Consolidation, rally. Trades up into it. I outlined it in the video where I was actually drawing it up. I want to see it hit here and come down to that 115.35 level. It later went to 115.35, but I got stopped out, and you saw that happen. So I got stopped out on two of the positions I was in, but they were not losing, quote unquote, losing trades, but I got stopped out of the trade. Did it stop my analysis? Did it cripple me? Did it make me paralyzed to take another trade? No. I traded within the context of what the market was showing me. When I was trading the British pound, that pair changed gears and allowed me to, okay, well, I'm not looking for the market to continuously move up. Now I got to get in sync with it going lower. So I did both sides of the marketplace, doing low resistance liquidity runs on that pair. This pair was heavily set up for this New York session move. Consolidation, Judas swing, power 3, expansion, reversal, come off the low, consolidation. Think about a daily range. Consolidation, rally, high of the day, low of the day, close off of the low. That's power 3 using the entire New York session. There is a New York session by the time windows that we refer to it, but there really is no New York session candle or New York session bar or range. Okay, you have to create that in your chart. That's why I tell everyone in the mentorship that there is no specific time frame, because this is what I actually traded in. I used what was yet to be a formation of a range on the high in this low. I worked within the best point I could in giving it for the public, selling short, and then covering really close to the low down there and getting all of the move in here. I even mapped out as it was going every time it created another opportunity if I hadn't sold short here where I would sell again. Selling in here, and I even told you right when the expansion was about ready to happen, the big boys would come in and sink it hard, boom, and it came. You like that sound effect? Boom. Something like some would say. But everything that we do for intraday, everything, okay? Folks that are a charter member use price action model number 5 for this fractal, and you'll get the high, and you'll come just very close to the low right here. You'll only be off by not even a point, a little less than a point on gold, but you'll get the high, but you'll be slightly off on the low. You'll be getting a standard deviation down to here using this consolidation right there, as you would if you were using the Asian range on the daily range for day trading. Everything here is the same, absolutely the same. So don't be concerned that you don't know everything that I'm saying right now. You may not understand everything I had already just explained to you here. Maybe it created more questions. That's good. Write those down in your journal and see if I don't cover them more adequately this weekend when we do our weekend review. I'd love to be able to talk more about this one here, but I think it's better if I just wait because I don't want to waste it with being tired because I'm fatigued. I really am fatigued. But let me know in Twitter if you want me to build our mentorship up with examples from the New York session. I'll put maybe a month or two of New York, and then I'll go and I'll do the London session, and then I'll do a month or two for the Asian session, and then I'll start working in other sessions like that we don't talk too much about, like London close and New York close. I already know you're going to say yes, but I just really want to know that you're not just saying, oh yeah, okay, just do that too. If you're not really interested in seeing it, okay, because you're embittered because I'm not going to show it to you live, I promise you, if you see these, you'll learn from them because they're not going to zip by in 50 seconds like I'd compress it to for Twitter. I just got to have a way of, and that's what I'm waiting for. I kind of have to play with the recording and the playback time because I'm not talking. You can clearly see me typing the annotations in, like when I do the recordings, I'm looking at certain things and I put the text thing up here and you see me typing all the stuff, and then I'll grab something that's already existing, I'll highlight it, copy it, and then change it. I'm doing that purposely so you can see that I am watching this live. I could add all kinds of things to my videos with overlays and stuff, but you can clearly see me doing it using the tool that's in MT4, okay, or MT5 for this particular demo. So, again, if you're interested in seeing all that being populated, I don't mind doing that because I do exercises just about every day, just about every single day. My family leaves me alone during the New York session, and they're sleeping in London, so it would be very easy for me to just record what I usually do, and won't have to worry about, like, when I'm doing things that I do for Twitter, it just I'm always second guessing myself what I want to do on the screen or make annotations to, because I do so many things. I know if I keep doing it, eventually I'm going to screw up and show something I don't really want the public to see outside the mentorship. So, but I do feel that a lot of folks in the mentorship have seen these last 3 days and they're like, wow, I want to see more of that, because it really makes these concepts concrete. I can see them and I can see what you're thinking when it's happening. And I really appreciate the fact that some of you will never trade that time frame. And I'm not inviting you to, but I'm showing you that even on a 1 minute chart, everything that I teach you is there. It's not that it's, only basically forming on a specific time frame. It's price. Price is price. And as I mentioned in this recording here, the range that I created was like, if we started the time here, we ended the time here and we started the time here, and this amount of time was a specific candle. Okay, inside that candle, this would be the price action. But there really is no candle that I could just readily go in and say, okay, here's that candle for this price range. At least not for this demo account. So I don't try to look at specific time frames and say one's better than the other. I just know that specific times of the day, I'm interested in the price range that is forming. This was the highest it formed, but it ran buy stops above a 15-minute equal high. We had a market structure break between these equal lows being broken, and we came back up into it here. We have a bearish breaker, fair value gap, returned back to the old equal highs level. We're in a premium, Judas swing, look for market protraction during a day where dollar looked like it was bullish. We had everything going for this one. That's why I just said I got to get in that short, because it's too good not to be in it. All right, so I promise you there'll be more annotations on the chart this weekend with this pair, and I'll cover the British pound as well with more detail and notes and such. But for now, this is going to have to do for the midweek review, and I will catch up with you guys by way of our weekend review. As a reminder, it will be posting in the forum Saturday at 5 p.m. my local time. And whatever that time is around the world for you, I don't know. If you don't know where I am locally, Just set a clock to New York local time in the U.S., and that's the time I'm on. So it's 5 p.m. New York time, local time. That's when the weekend review will be posting on the forum. Okay. And again, it'll be more stuff in there. And I got another teaching for you. So I think you'll like that as well. And don't forget, you had homework. You had homework to come up with a 30 to 50 pip trading plan. What the things were that leads to you taking the trade. What's the framework? What are the things that would negate the trade? What risk models are you going to use? How are you going to risk your capital? And what protocols are in place if you do suffer a loss? What will you do to resolve that drawdown? That was the homework for August. I think I gave it like maybe 5 days or 6 days into August. You had plenty of time. You still have time really to map it out. You don't submit that to me. You don't send it to me in email. It's just for you to compare with what I'm going to share publicly for everyone. The importance of doing that, I'm not teaching mentorship, but I am trying to stimulate the free students because I like teaching, but it's meant for the people in the mentorship too, because it'll give you a very basic outline for building a trading plan, which is fastly coming upon us in 2020. All charter members, that means they paid for all 12 months and they paid their charter conversion fee. We will start fleshing out those individual 12 price action models and make them into real do this, don't do that trading plans. So I kind of want to get you thinking about how you can go into those individual price action models as a charter member and formulate an idea and see how close you get to what I do when we actually start walking through them each month. And as a charter member, you also get a lesson this Saturday that will post 8 p.m. my local time. So there's your 2 videos, because I have a supplementary lesson for price action model number 7. Again, that's only for charter members, so don't ask me for the link. Don't wonder where it's at, because if you're still in the core content months paying, that content is not for you. It's for charter members. You'll get it when you get into charter member. All their lessons will be available to you as soon as you become a charter member, so don't worry about it. So until I talk to you on this Saturday by way of those 2 videos, be safe. Keep me abreast if anyone's over there in the UK by way of Twitter. I really appreciate that. And until then, I wish you good luck and good trading.